नमस्कार, मैं सीए मनमोहन जिंदल. We shall discuss today on independent directors and the need for him for financial literate. So, independent director should be financial literate because the Companies Act 2013 as well as LODR have provisions for the compulsory formation of certain committees and have also prescribed for specific activities to be carried out by such committees. So both the Companies Act as well as LODR listing obligations and disclosure requirements have given importance to the inclusion of independent directors in such committees. Means in such committees, independent directors plays a very important role and he is very important in compliances part and in trust to the stakeholders. So it is a very sensitive position from the point of view of the compliances and in maintaining the trust for the stakeholders. The independent director must be trained in financial literacy and the financial jargon terms. So, what should know for the independent directors? So, he must have the knowledge to read financial statements, first and foremost, to read financial statements. The knowledge of various terms used in financial management, like working capital, what is formations of companies, or so many things. The knowledge of using techniques of interpretation of financial statements, public data. Have an easiness in understanding balance sheet, profit and loss, and cash flow statement. Here, fund flow statement also a part of financial statements. Above statements should not be read, carried out in isolation, but should be read conjointly with accounting policies, notes to the accounts, auditor's report for a better decision helpful in the growth of the institution. He should make comparative study of financial statements, financial data with base year or benchmarks already fixed for the industry, for the sector, for the country, etc., etc. Extraordinary high or low figures may be replaced by the figures obtained through the techniques of interpolation and extrapolation. Necessary adjustment must be made for changes in accounting policies, prior period adjustments, and extraordinary items. So, how the data can be interpreted? Through trend analysis, comparative analysis, and ratio analysis. So, what is trend analysis? Income statements over balance sheet are compared for a number of years to find out the trend, whether it is going up or whether it is going down or whether it is stable. Such comparison may be made with the help of absolute figures or by the help of percentages calculated taking the previous year as the base. So what is comparative analysis? It refers to the comparison of the performance of a company with that of a similar company or the performance of the industry as a whole. While ratio analysis is done by comparing the ratios of the company with that of a competing company or industry as a whole. A ratio is a statistical yardstick that provides a measure of the relationship between two accounting figures. A ratio may be expressed as a coefficient, proportion, or percentages as well. So, overall conclusion is that to do his job effectively in a company, he should have the knowledge about the company, knowledge about the sectors, knowledge about the financial instruments, knowledge about the balance sheets, financial instruments, and other HR policies, etc., which we will discuss in the next slides. Thank you. Namaskar. मैंने ये चढ़ाई